Hello, Namaste. Thank you for tuning into Quantum Investing channel. This is your host, Sarat Chalam Cherla. Today, we're going to talk to a guest. Before I introduce him, I would ask you to smash that like button, share my video, and subscribe to my channel. This is really important for the YouTube algorithm to bring my videos up. The guest we're going to talk to, he is based in Silicon Valley. He came from finance background and he is now into real estate. He has started with single family and all. Mostly he has invested out of state and now he has been into mobile home parks. He has a lot of experience. He has shared a lot of insights in this video. I would highly encourage you to stay till the end of the video and watch. With that said, ladies and gentlemen, please welcome Todd Sulzinger. Hello, Todd. How are you doing?
I'm doing really well. How are you, Sarath?
I'm good. I'm good. Thank you for coming onto the show.
Absolutely. I'm really happy to be here.
Yeah. So I see you have done a lot of real estate and mainly the mobile home parks and everything. Could you please tell us yourself, how did you get into it and what was your background before and all that, please?
Sure. Yeah, I spent most of my time, most of my career working in corporate finance here in Silicon Valley, working as a controller or a financial planning director. Spent a few years living in the UK, helping out the company I was working for there. And during that time, I always had an interest in real estate, but didn't really know how to get into it and really find a way to do it successfully. And about 10 years ago or so, I started to read a lot of books and listen to podcasts and started going to local meetups and found people who were investing outside of where they lived. And I live in the Bay Area in California, and the real estate's very expensive here. But I had always thought if I was going to invest, I'd have to buy a rental property somewhere local to me. And through the group of investors I was meeting with regularly, they introduced me to quite a few people in the Dallas-Fort Worth area who were property managers, developers, turnkey providers, and made my first jump into real estate by buying single family homes there. And it was a great experience. It was really a big mind shift for me to think about not being able to own a property, but not being able to just drive around the corner and check on it and see it. But when you have a good team on the ground and have regular home inspections and have people go by to take pictures, you can really manage and own properties from far away.
Great. So starting outside the state, starting far is big start, I would say, right? What are the challenges you saw doing that?
Well, I think the biggest part was just getting over that mental hurdle of, is it possible? Once I was able to do that, then it does take an extra effort. I had to fly out there and I went on a tour with a group of people. So you have to get familiar with neighborhoods. When you live in a certain area, you know where the good parts of town are and where the not so great parts are and where the good schools are. And if it's not an area that you live in, that's more challenging. So from a kind of education and research standpoint, I would say that took more time, but that's really where you lean on the real estate agents and property managers to try to find like where the best areas are, because they're the local market experts. So that was probably the biggest challenge, was from a just education and research standpoint. It took more time to learn a new market compared to the one I was living in.
Great. So now that you're into mobile home parks majorly, I believe, right?
Right.
Now, how did you get into that? And I see your properties are far away from the Bay Area, I believe.
Yes, correct. Right.
So how did you find those deals and what due diligence you do finding those?
Sure. Well, to get into those, as I was starting to invest in real estate, I was looking at all different kinds of things to invest in. And like I said, I started in single family homes. And it was during that time that I decided I wanted to make a transition out of working in corporate finance. I'd been doing it for 20 plus years, and it was a great career and I had a good time doing it, but I didn't want to do that forever. And I was trying to find a way to use real estate to find a transition away from corporate finance, and decided to build a business around syndicating or doing crowdsourced investments for real estate projects. Once I made that decision, then it's a question of what asset class do you focus on? So I did a lot of research on apartments and self-storage and mobile home parks, and through a multi-year process, decided to land on mobile home parks because it's a recession-resistant asset. There's not any new parks being built, or very few in the country across the year. If anything, the supply is decreasing because they're often redeveloped for better use. So I kind of been over multiple years, zeroed in on mobile home parks. And then it was at that point in time, it was kind of a combination of cultivating the investors that I'd been talking to about building my business up, mostly like friends, family, colleagues that I'd worked with. And once I decided to focus on mobile home parks, I aligned myself with a mobile home park consulting company here based in California that also does property management services. And they helped me start doing research, looking for parks. I made a lot of contacts to a lot of brokers. There are some brokers out there that focus on mobile home parks.
Right.
And there's other commercial real estate brokers that every now and then might get listings. So kind of from a variety of areas, I was looking to find parks to acquire. And, then I kind of leveraged the mobile home park consultants I was working with to bounce ideas off them in terms of, would the park be able to be turned around like I was projecting, have them vet my underwriting. And then it was a matter of just kind of finding the right deal that I thought would be the right investment to bring to my investors. And through a mobile home park broker, I found the first two parks I bought in a town called Milledgeville, Georgia, which is about an hour and a half outside of Atlanta.
So do you face this tenant issues, evictions or anything? Is it statewide thing as a rules or the tenant friendly or like owner friendly thing? So how do you deal those?
Yeah, that was really some of my criteria as I was looking for what state to invest in. So I was staying away from looking at parks in tenant-friendly state. So I wasn't looking at anything in California or anything on the West Coast, nothing in New York, partly because of that, also because the prices were so high and the cap rates were so low. So I didn't think I could really offer a compelling investment to my investors. So I was looking for states where the laws were landlord-friendly. And so I found that in Georgia. The COVID has had an impact on things where once the pandemic hit, the courts closed and they stopped seeing eviction cases. So that has affected us. And that was one thing that we didn't expect. I think in a normal situation, mobile home parks can be very recession resistant because there's a huge need for affordable housing in the country. That being said, if the courts say that we're not going to accept any eviction cases, then you will have situations where tenants do take advantage of that, knowing that they really can't be kicked out or the court won't see their case.
All right. So maintaining these mobile home parks, right? I hope you have a operational, as a rental management company, something you work with.
Right. So I have my property managers here. They're actually based in California, but they manage about, 85 or 90 parks across the country. And one of their main responsibilities is to manage the on-site manager. So I have contact with that person as well, but they deal with a lot of the day-to-day activity. And like in the parks in Georgia, we have a manager who takes care of collecting rent, showing homes to prospective tenants. And then we have a maintenance person who lives on the park, and he'll deal with regular maintenance calls. He'll help with turning around vacant homes, getting them ready to rent. So we have that on-site staff to deal with all the day-to-day issues.
Great. So what kind of charge they do? Is it a monthly thing or the property wise or is it a percentage wise of the rental thing?
Their main business is consulting, and they offer property management as a service to their consulting clients. So I hired them as consultants to help me with due diligence, negotiation, create a turnaround plan. Their property management services are almost break even for them, but it's just a service that they offer. So it's just a flat fee that's less than $1,000 a month.
I'm kind of new to this part particularly. What is the difference between apartments and mobile home parks? Why not apartments?
Well, I said a couple of reasons. One is the big need for affordable housing. So oftentimes in a recessionary environment, maybe unlike this one, because this is unusual, if somebody's, potentially making a step down from an A class, B class, or a C class apartment, mobile homes can be more affordable. In the markets that I'm in Georgia and Tennessee, and the rents that we charge for a home, we own most of the homes, and we'll charge between, say, $400 to $600 per month for a 2 to 3 bedroom mobile home. And that'll be in a market like Milledgeville, where the rents for a 2-bedroom apartment might be, 7, 8, 900. So you might have a family that's, again, maybe it's a husband and wife with a couple kids, and they're deciding, oh, do I spend 7 to 900 for a 2-bedroom apartment, or might I spend a little bit less than that for a 3-bedroom mobile home, and have more room for my family, be able to drive directly up to the house. It's on a single level. They will often have a yard around their home, so it's more affordable, and it can be more attractive to people depending on their family situation.
What kind of NOI thing on cash on cash you look for while purchasing a property, and what are your exit strategies? What kind of exit strategies you take?
Yeah. So in terms of returns, it really depends on the state of the park. That's one of the things that's really interesting and can be beneficial about mobile home park business is you'll often find the owners have not run the parks really professionally or that efficiently. And a lot of times it's because they're just older owners. They may have owned the park for a long time. They might not have any debt on it. They might live in the park. And oftentimes you'll find parks that have very low occupancy because the owners haven't had the money to invest in it. So, the parks in Georgia right now are at about 60% occupancy, and we're rehabbing some of the homes and filling in some of the vacant lots. And you'll often find parks where there's, 40, 50, 60% occupancy. And, in those situations, they might be making a little bit money, but they're not operating as efficiently as they could be. And so those are opportunities I look for to really add value. So if you found like a fully stabilized, 100% occupied park that's maybe, has 100% tenant-owned homes where the tenants own their own home, those trade between, depending if it's in a, really expensive market, 4%, maybe as high as 6%. So I was looking for parks where there was some upside. So the parks in Georgia were making a little bit of money, but were closer to break even, with the idea that once we rehabbed some of the homes, we're able to bring rents up to market, filled in some of the vacant lots, that over a 5-year period, the cap rates could get up to the high teens.
Got
So
it.
that's one thing, I guess, in the apartment space, it's probably would be less likely that you'd find a
Can add
100 unit apartment building where there's only 50 of the units occupied. Typically a bigger apartment operators just, run them more efficiently and more professionally.
Got it. Got it. So how do you add spots? Let's say the acreage is around 5, 6 acres of land, and they are limited, like, 30, 40, 50 spots. Is there a what do you call, a rule or a law kind it bases on? It's up to the park owner. You want to increase the spots based on the whatever fits the criteria. How does it?
Yeah, well, most of the parks that I look at, like in these ones in Georgia and the ones in Tennessee, the lots were already had the infrastructure. So they have a pad, they have an electrical hookup, all the sewers in place. They were just vacant. So they either had the home on them at some time in the past and somebody moved it out. Maybe it was torn down for some reason. But typically you look for parks where the lots and the infrastructure are already in place. So there may be opportunities to add additional lots, but typically the best value add situation is one where there's existing lots with all the infrastructure in place. You just need to get a home and get it into the space.
Great. And these being manufactured homes mostly, right?
Mm-hmm.
How are they different from the regular ones, and do we have to come across extra challenges maintaining them? Oh, about the
From a maintenance standpoint, I would say not so much. I mean, they're built in a factory, and then they're actually on wheels and they're transported to a location. So they're not stick-built homes. They're they're anchored to the ground, but they don't have a foundation the way a home stick-built home would. And from a kind of an ownership standpoint, they're considered personal property, more similar to a car than a home. So typically there's registration and like a decal that would go on a home to say that like you've paid your property taxes for 2020 and here's the sticker you put on the home,
Oh.
very similar to a car, which is that does make financing challenging because it's easy to get a loan on a single family home somewhere, but getting loans for personal property for a mobile home is more challenging.
I want to jump onto the syndication part and
Mhm.
how you work and what kind of projects you're currently working on.
Yeah, well, from a syndication standpoint, there was two parks in Georgia that were part of one syndication, and then one in Tennessee that I closed a couple months ago. And so those are complete. Now I'm really starting the effort on starting the rehab because the one in Georgia is more stabilized, so it's more a matter of doing some of the rehab on the existing homes and a little bit of light value add in the park. The one in Tennessee is a bigger turnaround. The occupancy was lower, so that one I'm more active in managing to fill in the vacant lots and rehab the existing homes, working with the city in terms of some of the electrical hookups, new signage, new roads. So kind of working more closely with the city inspectors and the code enforcement to turn the park around.
So with the COVID situation and everything, are you in the market looking for newer properties or working with the existing properties, rehabbing and all that only?
I'm really focused on working on existing properties right now. I'm taking a little bit of a wait and see approach. I mean, if a really outstanding deal came across my desk, I would consider, putting together a syndication. But I think there's so much uncertainty right now in terms of what's going to be happening over the next 6 to 9 months. So I think it's going to be interesting to see. I think there's going to be some sellers that after this, say 6, 9 months down the road, will say, okay, I'm just ready to lower my price and I need to get out and I want to move forward. I think there's other owners that aren't in a hurry, that they're not going to be forced during this pandemic to feel like they need to lower their price. They're stable enough and they're willing to hold on until things turn around. So I'm taking a bit of a wait and see approach over the next 6 to 9 months to see how things shake out.
How do you think the politics or the elections would affect the real estate? Do you think there will be any effect after November or?
I don't think it's going to have that big of an effect on things. I know people are saying like, what's going to happen to the stock market and interest rates and all these things. I think especially in the mobile home park space, there's going to be such a huge need for affordable housing in any situation, just because there's, the cost of construction in most states is so high. There's often new A-class or even B-class apartments being built, but there's rarely any new, kind of entry-level apartment being built, and also no, really limited number of new mobile home parks being built. So I feel comfortable that from at least in this business, there's still going to be pretty strong demand for parks. And then also, in addition to my syndication business, I'm working now for this mobile home park consulting company that I had hired previously. And in that role, I really help match mobile home parks with people who want to acquire them. And that's been really interesting, where from a syndication standpoint, there was quite a bit of interest in my projects and putting them together, but people were also scared about the stock market, how much money they may have lost, and where should they invest. But on the direct purchase side, there's a lot of activity at the consulting company I'm working for now. We're getting calls, multiple calls a week from either individuals, partnerships, or family offices who are really interested in buying mobile home parks, and they're really active in that space. So that's been encouraging to see.
Most of my viewers are newbies and they want to get into real estate.
Mm-hmm.
What is the suggestion you would give to get into real estate investing?
Well,
Where
it
can they
really.
start and how to get into that?
Right. I guess the first question is, do they want to be an active investor or a passive investor? I think, when I first started buying the single family homes in Texas, I had this idea that I would just, continue to build my portfolio, and eventually that would grow enough that it would replace my W-2 income. And then really after a few years, I'm like, wow, this is going to take a lot of houses to be able to do that. And for every one I would need to purchase, I'd need to, come up with another $20,000 to $30,000 to make that purchase. So So that kind of got me thinking about doing bigger deals through a syndication model. So if somebody wants to be an active investor, I think going the single family home route to start is really a great idea, because it gets your feet wet. It's still going to be a good investment. It gets you, if you're managing the part directly or the house directly, then you definitely understand what it's like to deal with tenants and the application process and all those things. If you're doing it remotely, then you're getting a lot of experience managing the property manager and going through what that experience is like. So I think if somebody was going to make a start from an active standpoint, that would be great. Not to be biased, but I would say investing in a syndication is a great way to get your feet wet and into that business. I think through that process, again, you get access to much bigger deals than you would otherwise. And if you're with a good sponsor who's a good communicator and works well with their investors, which is something I try to do, you can learn a lot about like what's going on with the property, what are the drivers, what are the challenges, what's the turnaround plan. So you can learn about real estate investing that way.
Real estate investing as a business, right? How important is to have a legal team and accounting team on the whole thing? Do you have any?
Yeah. Yeah, incredibly important especially from a syndication standpoint. I work with a professional syndication attorney called Premier Law Group, and that is absolutely critical. Especially all the rules that the SEC has around crowdfunding and putting together syndications. Yeah, you do not want to take a chance as a syndicator, and you also want to make sure that your investors feel comfortable that all of the documentation is clean and accurate and being done to the letter of the law. So having a good attorney to walk through that process is important.
Great.
And they also offer counsel in terms of deal structure, because good syndication attorney has been through hundreds of these, so they've seen all different structures and offer great counsel that way. From an accounting standpoint, yeah, absolutely. Kind of internally, having a good team that manages all the books on a daily basis and produces reports on a timely basis is important. And then from a CPA standpoint, somebody that's going to do tax returns accurately and take advantage of everything, all the benefits of real estate through the tax returns and the K-1s. So I use a company called MRM CPA and Advisors out of Dallas, and Deb Pritchard, the CPA I work with, she's invested in multiple other syndications in the past. So that was one of the reasons why I chose to work with them, because they look at it from both an accounting side as well as from an investor side.
Mostly the real estate syndication friendly group, right?
Yes, exactly. Right.
You should go for them.
Mm-hmm, mm-hmm, yes.
Great. Yeah, you really shared great insights, Todd. I really appreciate it. I have a few more questions. Both, we would like to know more about what you think and all this.
Mm-hmm, yeah.
Maybe a little bit personal and not very. These are some rapid questions, kind.
Okay.
So, best habit you are proud of?
I would say one of the things that I do every day is something called a 5-minute journal. So I heard about it from Tim Ferriss, and I had always wanted to journal, but didn't know how and how long and how to do it. And he turned me on to this book called a 5-minute journal that just asked, a few questions in the morning about gratitude and setting your pace for the day, and then reflection at the end of the day on, what went well and what you may have done better. So I think that's a great habit that I've been able to start through this using the 5-minute journal.
Great. I love Tim Ferriss. I read his books, blogs, and everything.
Yes, yeah, he's great. And I'm not sure you have just one of his blogs. He mentioned this book, and I thought, I'm going to go check this thing out. And it's pretty cool.
Best app or tool you use on a daily basis?
Well, I say right now, because we've had so many fires here in California, there's one called Purple Air that gives it's like a crowdsourced application so people have sensors at their house that talks about takes readings of smoke and particles in the air, and you can look at it and just see kind of all around your neighborhood what how clear the air is. So
great.
Not real estate related, but definitely with all the fires we've been having, that's very helpful.
Are the fires okay now, or what's happening there?
They're still burning. I think they're between 40 and 60% contained right now. But where I live, there's lots of smoke in the air. You can see it and you can smell it when you go outside for anything.
Oh yeah, that's so sad.
Yeah.
Yeah. So best book, blog, or podcast you recommend?
Let me see. I guess the book I say the one that I really liked when I first got started was a book called Equity Happens, which was by Robert Helms and Russell Gray of the Real Estate Guys radio show. And it's great. It's like a story that gets told about how between two different people, one kind of simple guy who just slowly builds his wealth by investing properly, and another guy who's like a VP of sales in a company that just keeps spending more as he's earning more. And just a kind of a great story about how over time, equity happens, right? Mortgage pay down, inflation, putting your money into other real estate investments, that over time, equity grows and equity happens.
Great. What advice you would give to 20 years yourself?
I guess I would say start sooner. Yeah, start earlier. Just like, don't be. If I would have known kind of where I am now, I would have said, don't be scared off by the stories of, oh, you might have tenants that might ruin something, or there might be broken toilets or whatever it might be. But just to take a chance, take that first step, and I think I would have definitely made a recommendation to have done that and purchase a single family home as early as possible.
Great. Yeah, no, that's definitely an insight. Definitely, we need to come out of the comfort zone and take that very first step and see, right? So that's
That's right. Yeah, I think that our greatest success is just on the other side of fear. So that's where you have to start.
great. What is success means to you?
Success means continual improvement. Continuing to grow and learn and being a better person, better investor every day.
Great. What do you get inspired by every day?
I would say, probably my network of friends and business associates. I'm part of a couple different mastermind groups and work closely with a lot of other, in communication with a lot of other successful investors. So I think like seeing them every day and what they're doing and the impact they're making is, something I strive for every day.
Great. We would like to close with one final question. Life is, fill it up.
Life is exciting.
All right. That's great. That's great. Thank you so much, Todd.
Yeah, thanks, Sarath.
Giving us valuable information on the mobile home parks and everything. And my viewers, if they want to reach you, how can they reach you?
Yeah, so they can reach me at my email, which is Todd, Todd, at Blue Elm Investments, or at my website, www.blueelminvestments.com. I'm always happy to talk about real estate and mobile home parks in particular. I love to, again, educate people about my experience, as well as introduce them a little bit more about this business.
Great. I'm going to leave your contact information in the description below.
Great, thank you.
Great. So, okay. Thank you so much, Todd.
Okay, great. Yeah, and enjoy your show. Keep up the good work.
Thank you. Appreciate it.
All right, thanks. Take care.